Welcome to Deep Into Finance family. We appreciate you being here with us. Give us a like and subscribe to our channel. Share with your friends and family, and stay up to date to our future videos. In recent years, the global economy has experienced significant growth, especially in emerging markets such as China and India. However, this growth has been accompanied by increased economic, financial, and political risks that threaten to trigger the next big economic crisis. While the exact nature and timing of the next crisis are impossible to predict with certainty, this paper will examine some of the major risks facing the global economy and explore potential scenarios for the next big economic crisis. Key risks to the global economy. Debt levels. One of the key risks to the global economy is the high levels of debt that have accumulated over the past decade. According to the Institute of International Finance, global debt reached a record $277 trillion in 2020, equivalent to 365% of global GDP. This debt is a result of low interest rates, which have encouraged governments, corporations, and individuals to borrow heavily. However, the high levels of debt increase the risk of default, especially if interest rates rise or economic growth slows down. Asset bubbles. Another major risk to the global economy is the formation of asset bubbles. In recent years, low interest rates and easy monetary policies have fueled a boom in asset prices, especially in the housing and stock markets. However, these high prices are not always supported by underlying fundamentals and can collapse quickly if market sentiment turns negative. Moreover, the high prices of assets can also lead to financial instability, as investors may be using high levels of leverage to finance their purchases. Geopolitical risks. The world is facing increasing geopolitical risks, which could trigger the next big economic crisis. The rise of populism, nationalism, and protectionism has led to trade tensions, which could escalate into a full-blown trade war. The pandemic has also exposed the vulnerabilities of global supply chains and increased the risk of protectionist policies. Moreover, political instability, conflicts, and terrorism pose additional risks to the global economy. Climate change. Climate change is another significant risk to the global economy. Extreme weather events, such as hurricanes, floods, and droughts, can disrupt supply chains, damage infrastructure, and cause economic losses. Moreover, the transition to a low-carbon economy could lead to significant financial risks, as companies and industries that are reliant on fossil fuels may face stranded assets and declining demand. Potential scenarios for the next big economic crisis. Sovereign debt crisis. One potential scenario for the next big economic crisis is a sovereign debt crisis. Many countries have high levels of public debt, which could become unsustainable if interest rates rise or economic growth slows down. Some countries may face a loss of confidence in their ability to repay their debts, leading to a sharp increase in borrowing costs and potentially default. A sovereign debt crisis could have significant spillover effects on other countries and could trigger a broader financial crisis. Asset bubble burst. Another potential scenario is the bursting of an asset bubble. As mentioned earlier, high asset prices can be vulnerable to sudden shifts in market sentiment, which could lead to a sharp decline in prices. If this were to happen on a large scale, it could lead to a financial crisis as investors face large losses and financial institutions become destabilized. Trade war. A trade war between major economies, such as the US and China, could also trigger the next big economic crisis. Protectionist policies could lead to a decline in global trade, which could harm the global economy. Tariffs and other trade barriers could lead to higher inflation and increased costs for businesses, which could result in lower profits and job losses. Climate-related disasters. Climate-related disasters, such as hurricanes or floods, could trigger the next big economic crisis. These events could disrupt supply chains, damage infrastructure, and cause significant economic losses. In addition, the transition to a low-carbon economy could also pose significant financial risks, as companies and industries that are reliant on fossil fuels may face stranded assets and declining demand. The next big economic crisis is impossible to predict with certainty, but there are several key risks that could trigger it. High levels of debt, asset bubbles, geopolitical risks, and climate change are all potential sources of instability in the global economy. A sovereign debt crisis, bursting of an asset bubble, trade war, or climate-related disaster could all have significant spillover effects on other countries and could lead to a broader financial crisis. Therefore, it is important for policymakers, businesses, and individuals to be aware of these risks and take appropriate measures to mitigate them. This could include reducing debt levels, improving financial regulation, and investing in measures to address climate change. Ultimately, it is only through proactive measures and international cooperation that we can hope to avoid the next big economic crisis. The pandemic has also demonstrated the interconnectedness of the global economy and the need for coordinated responses to economic crises. The pandemic has had a significant impact on the global economy, with widespread job losses, business closures, and disruptions to supply chains. Governments around the world have implemented a range of measures to support their economies, including fiscal stimulus packages, monetary policy measures, and measures to support businesses and households. While these measures have helped to mitigate the worst effects of the pandemic, they have also led to increased levels of debt and the risk of inflation. In addition, the unequal distribution of the impacts of the pandemic, both within and between countries, has highlighted the need for greater global cooperation and solidarity in responding to economic crises. The next big economic crisis is likely to be shaped by a combination of factors, including debt levels, asset bubbles, geopolitical risks, and climate change. To mitigate these risks, policymakers will need to take a proactive approach, including measures to reduce debt levels, improve financial regulation, and address climate change. In addition, greater international cooperation will be needed to ensure that the impacts of economic crises are shared fairly across countries and communities. One potential solution to the risk of an economic crisis is the implementation of a Green New Deal. The Green New Deal is a proposal for a comprehensive package of economic policies that aim to address both the economic and environmental challenges facing society. The proposal includes a range of measures, such as investment in renewable energy, energy efficiency, public transport, and other sustainable infrastructure. Implementing a Green New Deal would not only help to address the risks associated with climate change, but also provide a significant economic stimulus. The investment in sustainable infrastructure and renewable energy would create new jobs and industries, boosting economic growth and reducing inequality. A Green New Deal would help to reduce the risk of stranded assets in the fossil fuel sector, as the transition to a low-carbon economy would be managed in a controlled and systematic manner. However, implementing a Green New Deal would require significant political will and cooperation, both nationally and internationally. The scale of investment required would be substantial, and there would be significant resistance from vested interests in the fossil fuel sector. There would be challenges associated with coordinating policies and investments across different countries and regions. Another potential solution to the risk of an economic crisis is the implementation of a Universal Basic Income UBI. UBI is a policy proposal that would provide a guaranteed income to all citizens, regardless of their employment status. The idea behind UBI is to provide a safety net for individuals and communities that are most vulnerable to economic shocks and disruptions. Implementing a UBI would help to reduce the risk of widespread job losses and inequality in the face of economic crises. It would provide a basic level of income security for all citizens, reducing the need for emergency government interventions, such as stimulus packages. Additionally, a UBI would help to reduce the stigma associated with unemployment and poverty, and would give individuals and communities more freedom to pursue their goals and aspirations. However, implementing a UBI would also require significant political will and coordination. The cost of implementing a UBI would be substantial, and there would be resistance from those who are opposed to the idea of providing a guaranteed income without any work requirements. There would be challenges associated with determining the level of the UBI, as well as ensuring that it is distributed fairly across different communities and regions. The next big economic crisis is impossible to predict with certainty, but there are several key risks that could trigger it. High levels of debt, asset bubbles, geopolitical risks, and climate change are all potential sources of instability in the global economy. A range of solutions exist to address these risks, including implementing a Green New Deal, a universal basic income, or other policies and measures to address these challenges. Ultimately, it is only through proactive measures and international cooperation that we can hope to avoid the next big economic crisis and build a more sustainable and resilient global economy.